Hopefully this is almost going to be water under the bridge very soon. A lot of states are in phase two, and some states are, coming back to normal. So hopefully the normal stages are coming soon. There's lesser time, that we've passed already. So that's that, and of course, I don't want to get into more stuff in this particular talk show, but I hope that everybody out there is calmer at this point, and I hope that a lot of the protests and things like that are more positive out there, and delivering a message of unity. And again, we stand united in the U.S., and as all Americans, we hope that we have trying just to have a message of peace here and unity. So from this platform, let's all stay positive and stay united. That being said, we go back to the actual show. So first of all, Mark and John, can you tell us a little bit about yourselves and just the company itself, and then we'll go from there.
Yeah, good morning. My name is Mark Carlin. I'm with EMM Financial. We're based out of Cherry Hill, New Jersey. I personally been in the mortgage business for 20 years now and still going. My website is markcarlin.emmfinancial. That's emmfinancial.com. My phone number is 732-904-8580, and my NMLS number is 171231. We are licensed in about 41 states, so we have most of New Jersey covered. I personally hold a license New York, New Jersey, Connecticut, Pennsylvania, Delaware, Maryland, DC, Virginia, and Florida. And we thank you for having us here. I hope everyone is well. I hope everyone is safe. And the goal is to give you as much information as we can on reverse mortgages, and hopefully uncover some of the misconceptions that are out there and you may be reading online or watching videos, whatever it may be.
All right. Thank you, Mark.
And good morning. I'm John Reichart, and I'm actually an account executive with American Advisors Group, and we are a reverse mortgage lender. I'm sure a lot of you have seen the Tom Selleck commercials for AAG, and that is my company. So I've been in mortgages for about 25 years. In all different facets of it, as a loan officer, as an account executive. My job is to deal and help brokers across the country with their reverse mortgages, help them get the word out, educate people on how they work, and help people build a better retirement.
Excellent. So what are your service areas? I mean, are you in a particular jurisdiction, or you cover multiple states?
For me, I cover pretty much East Coast, east of the Mississippi, to build relationships with mortgage brokers throughout the East.
Okay. Mark?
And I obviously, as I said, we have the ability at EMM, we're about 41 states, so we could cover most of the country. And I personally have 9 states.
Very nice. So I know, again, reverse mortgage is a big question. A lot of people have some uncertainties about it. They don't know how it works. And for me personally, from the platform, what I want to emphasize on is that when someone gets to a certain age, I've seen this happen where they have difficulty paying for some of their cost. And long-term care is almost an eminent thing. It's going to happen to a stage. There are a lot of studies and historic, statistics that show that people, when they get a certain point in their life, they do need some sort of long-term, health access and care and help. And sometimes the difficulty is to find the financial, means to do so, and it's costly. Now, some of the insurances out there, are limited to what they can offer, and you do need to tap into some resources financially to get there. And as I said in the beginning, we've done some of these presentations with seniors, and obviously to try to help them understand how they can tap into their equity and so on and so forth, and get into a program that gives them access to to dollars. And of course, I'm going to leave that to the experts today. for you guys to tell us how an actual reverse mortgage does work and who benefits for it, who's eligible, what are the requirements, and really just if you guide us through the whole process, from A to Z, and how the benefits work, and of course, we talked about some of the concerns and I guess that stigmas or hoaxes that are out there about the reverse mortgage, like something, there's some negativity around it. So we'd like to remove that, hopefully today with your input, and clarify for people that it's a good, valuable option that would work. Maybe not for everyone, but for those that actually see the value of it. So please, Mark or John, anyone?
Yeah. So we put together a PowerPoint presentation for your viewers, and a lot of the questions are going to get answered. But before we start, and actually, I've tried to talk about this with my own mom. A lot of people think, well, the bank is going to take my house. I'm not doing reverse mortgage because I don't want the bank to take my house. And I think that's really one of the biggest misconceptions out there today that we really need to overcome and let them know that that's not the case. So, John, I'm sure you're seeing the same thing too, right?
Oh, absolutely, yes. And with a reverse mortgage, the borrower remains on title. They own the house. It's just like a regular mortgage. It's set up as a reverse. The borrower cannot lose the house unless I won't even say unless they maintain the house until they either no longer live in the house, or actually the last person on the loan no longer lives in the house. At that point, then the mortgage has to be satisfied, but they cannot be kicked out of the house. Not for, even if their equity position is negative, if they outlive their life expectancy and they owe more than what the house is worth, they cannot be kicked out of the house. They own that house.
So if somebody borrows $200,000 and God willing lives another 50 years, and the house now is worth $300,000, but they owe $500,000, they're really underwater.
Yeah.
No problem. They can live there for the rest of their life.
That's right, for the rest of their lives.
Okay.
Which is one of the most
having to make a payment.
That's excellent, because that is the biggest concern. Like, is the bank going to take my house? I mean, typically for a regular, loan, if you don't pay your mortgage, you get foreclosure, you get kicked out of the house if you don't pay. This is actually some sort of a security, or at least a guarantee. You're in the house until you're no longer in the house, period. So you don't have to worry about going anywhere. And you also had access to finance to some of dollars that you've already earned and put into your equity, right?
That's right.
Absolutely. I think that's the biggest misconception. And the bank doesn't want your house. They want you to stay there. No. And I think people think that the bank wants to take over. Banks are not in business to take your house. They don't want your house.
No.
And again, obviously, offline, if anybody has any additional questions, you can contact me and we can have a further discussion offline. But I really wanted to get that out there because I thought it was important.
Yeah.
And again, a reverse mortgage is not for everybody, but it's for the right person. It really could be a game changer and financially a lifesaver, depending on what their situation is. So I'm going to go ahead and we're going to start this PowerPoint, which should give us a lot of information and answer a lot of our questions. So, can you guys see this?
Yes, we can.
Yep.
Okay. All right.
So while we're working on that, so who is eligible, and what are the requirements? Or I guess that's going to be covered in the presentation.
Yeah, it will be, but it's pretty simple. You have to be 62 or older. You have to live in the home, and you have to have, an equity position that will allow for the reverse mortgage. But that's pretty much it. And then
that's pretty simple.
It is. And I do want to add, you know, when you take out a reverse mortgage, there's never a payment due. You don't have to make payments like you do on a normal mortgage. What you do have to do is maintain the home, and you do have to pay your insurance and taxes. And that's all you have to do. Otherwise, you can take out the equity without having to pay it back on a monthly basis.
So in essence, you're taking money, but you're not paying anything out. So you have no mortgage, no monthly
That's right.
payment, but you have access to your funds. You know,
You
instead
have
of
access to your funds, yeah.
because most of us, what we'll do, we'll probably try to go refi or try to get some sort of a loan, equity loan, or line of credit against your property, HELOC type, and get that so we can get some of the equity, that we have there. However, with this format, you basically have access to it without paying. So you actually plus in two ways. You're not paying
That's
out,
right.
but you take in the money. Of course, it's depleting your equity, but at the end of the day, that's your money that's in the bank. You're just taking it as a resource.
Exactly. You're just taking it. Yep.
Good.
So who's eligible? As you can see, minimum age 62. A non-borrowing spouse can be under 62. So if the borrower is 62, the non-borrowing spouse is 50, not a problem. It's going to adjust to the lower of the two ages, but we can still get that done. You must own a home.
What if the two people are on the mortgage? So both husband and wife are, or spouses are actually on the same mortgage. Would they still need to qualify at 62 both, or it doesn't matter as long as one of them is qualified as 62?
Yep.
ahead,
As
John.
long as one of them is 62, they qualify. So now the equity they'll be able to get at will be qualified at the lower age, but both will be on the loan, and both will maintain the same rights to the loan, where, if one passes before the other can still remain in the home until they either pass or have to move out for health reasons.
So there is a safety here for the non-borrowing spouse who was younger. I guess back in the day when the borrower passed, the non-borrowing spouse had to leave the house. And maybe that was some of the problems in the past. Today, that's not the case. The non-borrowing spouse can live the rest of their life in the house and not have to be worried about being removed from the house. And I think that's huge. That's a really big game changer for this product. It must be your primary resident. So 6 months and 1 day is considered a primary. It must be your primary resident. And meet the financial requirements of the HECM program. You're gonna check your credit. They're gonna make sure that you're able to meet your other obligations, your taxes, your HOA, your insurance, and just the basic needs. So there is an underwriting process that we want to make sure that you could still afford, although you're not paying the mortgage, you could still afford to keep the house and maintain the house. Very, very important. Okay, getting back taxes and insurance. It's important that the taxes and insurance are paid. This is one of the responsibilities of getting the mortgage. And HOA, if applicable, if you live in a community where you have an HOA, that also must be paid by you. To start, you must complete a HUD-approved counseling session. It can be done in person, online, roughly about 45 minutes. They're basically going to explain to you what we give you to go over to make sure that you fully understand. Again, this is another protection for the borrower to make sure that everything we tell you is true and accurate, and you fully understand that you're getting into a product and you're comfortable with it. We want to make sure you're comfortable. If this is not for you, we don't want you to do it. So it's important that you now have the HUD-approved counselor that's going to be there to help you. Maintain your home according to FHA requirements. Make sure utilities are on. Make sure the property is being maintained. Things are getting fixed like you would do. normally by living in your house anyway. Continue to pay the taxes and the homeowner's insurance. That's a must. And part of the financial responsibility getting a loan is to make sure you have the income to pay that. And I know 62 or over, a lot of people get SSI and may have pensions and other things like that. So in most cases, they don't have the problem with the taxes and insurance.
Well, that would be a problem anyways if you couldn't do it. I mean, you wouldn't be doing it on the regular mortgage, right? I mean,
Again, it's just the same thing as a regular mortgage. You have to pay your taxes and insurance.
Sure.
Instead of writing a check to the mortgage company every month that most of us do. In this case, you may not write a check at all, or you may actually get a check every month. So it's in reverse. Okay, here's the question that we were talking about before. Does the bank own my home?
Well,
Mark,
we're not seeing the actual flow. So
you can't see that?
no, we can see only one page, but we're not tracking with the actual presentation. Do you want me to turn it here?
Can you take it over? I'm at number 5.
Okay. Give me 1 second.
Common question number 1. Number 5.
No, hold on a second. Give me 1 second, because I had given you access. So give me 1 second here.
How about now?
Hold on. Yep.
There.
You can see it on my end?
Yep.
All right, great. Sorry about that.
It's okay.
Common question, does the bank own my home? We spoke about this before. The answer is no. Reverse mortgage borrowers retain ownership in their home. They're not relinquishing title or ownership using the reverse mortgage, simply borrowing against the value of the home. Just like any other loan, you must comply with the loan terms. So I think we got that out of the way today, that the bank does not own your home. You continue to stay on title, and that's good.
But you, for example, if you wanted, let's say for whatever reason you wanted to move and sell the house, can you still do that and just pay the difference, whatever you?
So you borrow $200,000. You did the reverse mortgage for 3 years. You now owe $230,000. You sell the house for $400,000. We pay the $230,000 off. You get the rest minus closing cost, just like any other loan.
Yeah, just like a regular mortgage.
All right, so it's good.
Yeah.
So you're not restricted to anything. I mean, the only thing is really you've taken the value that you have in there, and instead of you getting an additional line that you pay, an additional second mortgage, now you don't have a mortgage in the first place, and you just take the money that is paid to you.
That's
exactly. Right. And again, there's a lot of people that may not qualify for a traditional mortgage. SSI may be the only source of income, and with a regular mortgage, you must qualify, you must meet a certain debt to income, you must have a job or have enough income. This may be the only way someone can actually qualify for a mortgage. And I see that a lot. This is really the only option out there with, the current lending. And again, for some people, it's a great option. It's a great option. But,
Mark, you say there's something about qualifiers. Now, I know in traditional mortgages, you do need to also have some sort of a credit, level and, debt to ratio, debt ratio type of, things. Does that actually apply here as well? So you do have to have a certain score, and you do have to have a certain, percentage of credit cards if you did. Because, I mean, someone who may be at a difficult pass, may already be in a bad shape with that as well. So is there any way to help them that way?
Hey, John, You
Yeah.
want to get deeper into that?
Sure. Yeah, reverse mortgage isn't credit score driven. So we don't really look at credit score. We look at credit history. It's kind of old school where we look at how they pay the accounts they have. We make sure they and verify they've paid their taxes and insurance on time. If they've had delinquencies with explanations, we're okay. Say someone had a medical situation for 6 or 7 months, and during that time they were late on certain things, but we can verify that the time frames match up, and we can verify that situation, then they can still qualify. Even if they have been late or have bad credit, we can do what's called a LISA. And what that means is that instead of the borrower paying their taxes and insurance, we can escrow for that, take that out of the proceeds of the loan so that they don't have to worry about anything. So there are a lot of different ways to work around with people who may have limited credit or not great credit, but it's definitely not score driven. So there's a lot more options available than on a regular mortgage or a line of credit or an equity line or something like that. And the residual income requirements are much less than what you'd have to qualify for with the debt ratios. So you do have a lot more flexibility in ways to make it work.
Listen, that sounds like like a sweet deal, considering most of the regular financial mortgages, you need all the above, and
Yeah.
that's where it becomes difficult. Now here it sounds like there is none of the above. Actually, it's all upside, no downside. I mean, ultimately, you owe the bank, but for
That's right.
someone that's living there, they still gonna have to live their life regardless, and would have paid the mortgage regardless. So. It looks like it's a positive. I don't see a negative here, but again, it's everybody's prerogative to actually look at it, view the options, the merits, and ultimately see if this is something that's good for them. But certainly,
That's right.
it will give them the access that they might not have had otherwise.
And listen, a borrower who's on a fixed income, their property taxes go up, maybe maintenance goes up, now their insurance goes up, and now they're $500, $600, $700 a month short. Where they get the money right now? Are they going back to work at 75, 80 years old, or do they want to look into a reverse mortgage and try to bridge the gap that way? So at least this is a option for somebody that has equity, and whatever the reason is. And again, this is something they can discuss with their financial planner. Whatever their goal is, they can use this in many different ways. But sometimes it's just about bridging that gap of $500, $600 a month that they're short. And again, the reverse mortgage could help them accomplish that. So here's something we just touched with a reverse mortgage. Would I no longer have the option of selling my home? So I live in New York. I'm tired of the cold winter days and the snow and the sleet, and I want to move to Florida.
That's me.
Yeah, well, I think that's all of us in the winter. We, it's like who likes the cold and the snow and the sleet? Although the last winter hasn't been too bad. Can I sell my home because I really want to get out of here? And the answer is yes. Like every other mortgage, a reverse mortgage becomes due and payable when the property is sold or whenever the borrower leaves the home. Borrowers must maintain the home as their primary resident, pay all taxes, homeowners insurance, and comply with all loan terms. Another great feature of this type of loan is that absolutely no prepayment penalty or restrictions as the homeowner's right to sell the property. So you take this loan out a year later, you decide to pack up and move, there's no prepayment. You don't have to stay in the house for 2 years or 3 years or 4 years. And I believe before 2008, some loans did have prepayment penalties.
Yeah, some did.
No prepayment penalty. So if you want to pick up and move somewhere warm, you can.
And keep in
You're
mind,
just making it sweeter and sweeter right now.
and you can do a reverse mortgage purchase. Say someone's up in New York and they want to downsize and move to Florida, and they have equity. They sell their house for $600,000, and that's what, they owned it, so they have 600,000. If they want to move and buy a house for 300,000, instead of paying full cash for the 300,000, they can do a reverse mortgage. They may only have to pay 180, put 170 or 180,000 down, and they won't have a mortgage payment. They'll have a reverse on their new purchased home, and they can take that other money and invest it.
Wow.
What I've seen the reverse purchase do is it allows somebody to get into maybe something bigger and better than they normally could have gotten into. So they go down to Florida and they want to live in a certain development, maybe with certain amenities, but the price is a lot higher than maybe what they could afford. By doing the reverse purchase, it will allow them to step up and still have no mortgage.
Yep.
So it's a nice option for even on the purchase, because most people think of reverse mortgage for refinances, but it has some advantages on the purchase.
On a purchase.
See, I never knew that. I mean, that is news to me. I mean, a lot of stuff is news to me, and I've been to these presentations before, but today I think it's a lot more clear than I've ever had been.
All right, so will a reverse mortgage affect my Social Security, Medicare, or pension benefits? Question a lot of people probably have. Delaying, so basically will a reverse mortgage affect my Social Security, pension benefits? Medicare and Social Security may be affected. Delaying taking Social Security benefits increase monthly payments later in life. Reverse mortgage funds are considered loan proceeds and not income. In some circumstances, Medicaid and other income-based benefits may possibly be affected. Another plus side is that the longer you wait to access Social Security benefits, the more you receive. A reverse mortgage can help delay access to Social Security in order to boost your lifetime retirement income. I am not a financial planner, and I don't really want to get too much into how financial planning works with all that. And this is something that you can discuss with a financial planner to come up with a strategy.
Okay.
Yep.
Fair enough.
All right. With a reverse mortgage, will I have nothing to leave to my heirs but debt? So a lot of the times it's the children that don't want their parents to do a reverse mortgage. So now if mom and dad are in the home, want to stay in the home, but can't afford to stay in the home, they can sell the home, and still you're going to have to go somewhere and pay, or they can move in with the children. Normally, when they hear they have to move in with the children maybe have a change of heart and want to look into a reverse mortgage and keep mom and dad in their own home. So, so this is not necessarily the case. When a reverse mortgage is repaid, the amount due is the total monies that have been advanced to the borrower, including paying off existing mortgages, the sum of all cash and disbursements to the borrower, and upfront fees associated with the mortgage, plus deferred and accumulated interest. After the estate satisfies all the obligations and the reverse mortgage loan is paid, any remaining equity goes to the heirs. And since a reverse mortgage is a non-recourse loan, no debt above the value of the home can ever be passed on to the heirs. So basically, like the example before, the house is worth $200,000 and now they owe $400,000. I get an inheritance. Am I responsible for the difference? Since this is a non-recourse loan, you tell the bank, take it. I don't want any part of it, and that goes away.
Yeah.
So the children are not left with a burden, which is important because I think that's one of their concerns. I mean, am I going to be left with a problem?
Yeah. And, you mentioned it earlier, Mark, as a lender, we don't want to own the house. We're not in the business to do that. So these loans are structured, there's a lot of different actuary tables and a lot of research that goes in to determine the amount of equity and the amount of cash a borrower can take out to really try and keep them from ever being in a negative equity position. So, there's a lot that goes into this loan to prevent that. Now, if someone's blessed with a super long life and way outlives their life expectancy, they may have that, a negative equity position. But in most cases, you're not going to face that. So there still will be some, equity and things to inherit. You're not going to just inherit debt in most cases.
Yeah. And depending on how the real estate market performs, in some cases, if you buy something for 200, 10 years later, it's worth 300. Well, a lot of that, a lot of the money that's been, getting tacked on that you're not paying, it really kind of gets washed out by the appreciation. So in some cases, there could be a profit depending on how the real estate performs over the life of that borrower. So,
is there a time limit to these things? No, I mean, right? As long as you're in the house.
That's right. If you're in the house and you're maintaining it and paying your taxes and insurance, as long as you're there, there's no time frame, no time limit.
So, I mean, in states like where the taxes, the real estate taxes are low, I mean, frankly, it's not much, payout that goes on into anything. Yeah, and the insurance is also cheaper. So,
yeah,
yep.
Not in Jersey though.
Well, not New York, New Jersey, but so should a reverse mortgage only be considered as a loan for the last resort? In the past, reverse mortgages have been seen as means to convert home equity into tax-free cash for monthly living expenses. Today, reverse mortgages are used for that as so much more. In fact, many financial planners have embraced this powerful financial tool for their clients. Consult your tax advisor. Again, I'm not a financial planner, so I don't really want to discuss that.
I just want to talk a little bit about some of the benefits of a reverse in that you can set it up today with a line of credit and not take any cash out of it today. Maybe you don't need it today, but you have established the line of credit that you can tap into in the future in case you have a need. And that line of credit will grow every year that you don't touch it. So, you mentioned as a last resort, well, this could be a great way to plan for the future, to take out a reverse today, even though you aren't going to tap into it. You have that there. It can't be taken away. And if you ever need it, say 5-10 years down the road, maybe you need some in-home care. Well, you now have the line of credit set up to be able to take care of that. So It can be a great plan for the future.
Very nice.
Thank you for that. The common uses of a reverse mortgage. So you can pay off an existing mortgage and eliminate the monthly mortgage payments, which obviously, if your mortgage payment is $1,500 a month, that goes away. Well, $1,500 a month, that's, more money you have every month to spend on other stuff. Take a vacation, do whatever you want to do.
Pay the bills, the health bills.
Again, invest in long-term care, or again, whatever. It's access to another $1,500, whatever it is that you need to do with it. At least you have it. Borrower must pay the property taxes and homeowners insurance and HOA if applicable, maintain the home, and otherwise comply with the loan terms. So like I said, like any other mortgage, pay your taxes, pay your insurance, pay the HOA, make sure you're taking the house. If the roof's falling off, fix it. This can make your retirement savings last longer. Use a standby HECM reverse mortgage to grow a line. John was just talking about that. Of credit to preserve investment accounts during market downturns or build a safety net for unplanned emergencies, which happen, things in life that are just out of our control. Home repairs, just like that roof I was telling you about. The roofs, unfortunately, they don't last forever. Wish they did. And healthcare expenses, which healthcare, they just seem to go up and up and up. So
And that's really our concern from this platform because,
Yeah.
again, from the senior markets and for senior health, I mean, it is really crazy and crucial sometimes to access those dollars to get the care you need and live in their own home versus like finding a hospital or a nursing home or some sort of an assisted living type.
absolutely, absolutely. Supplement your retirement income with monthly payments. So a few different ways to take your money with reverse mortgage. You don't have to have any mortgage payments. You don't have to have a mortgage payment. You can get a monthly income. You can get a lump sum, a little bit of both. And again, that's something that we can kind of give you a proposal based on the age, based on what the house is worth, and come up with a plan for you. Supporting aging in places in a place expenses like caregiving and home modifications. Sometimes you may need to modify a bathroom to make it accessible. If you can't get up the stairs, there may whatever the modifications may be in a home, and they're not cheap. So and a lot of people, they want to live their life out in their home. I'm sure most people, if they can, they want to stay in their home. And if there's a way to modify the home where people could stay in the comfort of their own home, this could possibly help fund it.
Well, just on that note, Mark. So a lot of from the insurance world and the healthcare, I mean, that's where the trends are. I mean, we usually look at people and we want to keep them in their homes and healthy, happy, until they decide not to be, but or their families want to do something different, But really, that's the purpose. So this actually comes along nicely.
They say no place like home, right?
Yep.
Use a HECM for a purchase loan to buy a home that better fits your needs. We were discussing that before. It's not only for existing homes. You can go out and buy a new home and possibly get a bigger home or a home that normally maybe you couldn't afford, but being that you have the reverse mortgage, it could get you into something maybe bigger and better if that's what you choose or want. So it's another option. I think a lot of people don't realize it can be used for purchases. John, what would you say the ratio is for reverse mortgage purchase to refinances?
I probably see 25 to 30% purchase money.
Right.
So it's definitely there's a market out there for sure for it.
So we're not doing a great job in the mortgage world letting people know that HECMs can be reverse mortgages can be used for purchases. We got to do a better job in letting people know.
Well, I'm glad that we're here today because a lot of people are going to hear about this for the first time, and I was one of them. I mean, I've always thought it can only be to take money to access it, but not so much to purchase something with it. Yeah. So this is actually a very good thing. Now we're coming to the last 2 minutes of the show, and is there anything that we want to wrap the actual, I guess a message or something? I mean, that's a good message that there is more that can be done with it. Any last thoughts?
I think we covered most of what we need to cover, and hopefully we've maybe opened some people's eyes that there are other options out there. Again, I can be reached at 732-904-8580. My email is mcarlin@emmfinancial.com. And I'm sure you'll put my information out there if somebody has any questions. But
I would just say, a reverse mortgage isn't for everyone, but it never hurts to look and get the information. So, if you think it might work, or even if you never thought of considering it, it never hurts to talk to somebody, give Mark a call, and see what he can do. At least look at a proposal and see if it makes sense for you.
All right. Well, we're coming to the end. So on behalf of the iHealth channel, iHealth Radio, this is Hurricane Nage. Thank you, Mark. Thank you, John.
Thank you.
This is great information, and look forward to maybe a follow-up or second sequel of this in a few weeks, maybe, and we can talk. But for
Sure
you,
thing.
those of you who are watching, hope that this is actually valuable and that you can use this information for your personal use or your family use. That being said, have a great day. Stay safe out there, Hurricane H, and the team here. Thank you.
Thank you.